Now let's talk about where we want to enter. We know that our trend is down because we have our lower low and we have our lower high, and now we have a minor support level here, and we have our breakdown below support. Once price closes below support, now we can put our entry in. We can put in our entry order. Once we see that close below support, now we can put in our limit order to sell short. And where are we going to place that limit order to sell short? It's going to be at the breakout point. So we want, when price pulls back to the breakout point, that's where we want to enter. That is the safest place to enter because of where you're going to have to place your stop. And see, we want to place our stop where the trend would be violated. So if operators want to chase your stop, in order for them to chase your stop, they're going to have to go against the trend, meaning they're going to have to take a much larger risk. And believe me, they don't want to do that because they're short here too. They're trading with the trend. So if they chase your stop too far, let's say they chase your stop above this high, this is next resistance here. But then we would have a what? We would have a higher high if price should go and close above this high. And we would have a higher low. So where would you place your stop knowing what you know right now? You would place your stop above this high, because this high is the next level of a resistance. And if price should go above this high, many short sellers are going to start buying back to cover their position. And then when other traders see this, they're trading with the trend too. And remember, I told you down here how the biggest moves start when trend first reverses. So bringing price up above here through manipulation or otherwise risk a trend change from down to up, and risk spooking the herd into buying and pushing price even further up. And this is why the next level of resistance would be your stop. You want to break below support. You want to enter on the pullback to the break. You want to place your stop above the very first level of resistance. And then that leaves us, where should we take profits? What should our profit target be? Well, markets cycle between support and resistance. So if we want to set our profit target, now we're going to go down here to the very next level of support. So you always want to place your target at the next level of support if you're trading short, and you want to place your stop above the very first level of resistance. If I had decided to go short here, now even though this doesn't necessarily mean a trend break here, but let's just say simply because it was a short breakdown below support here, I decided I want to go short. Once we have this close below support, I'm going to put my limit order in to sell short on a pullback to this level. My stop is going to be here because that's first resistance. My target is going to be down here. And when we look here, we see that the target was not met coming from up here. But we really don't know that yet, because this is a line chart. and line charts are based on closing prices. So you won't see the extreme high or the extreme low. When we look at the line chart here, price may have spiked down to this level where the breakout occurred and then bounced back up and closed up here. But in any event, if we were to go short on the breakdown of this support, we would have placed our target down here and our stop above here. On the long side, if we decided to go long on the breakout above here, we would, after the close above the high, we would place our limit order to buy or go long on a pullback to this level here. Now where would our stop be? If we went long here and entered on the pullback to here, where should we place our stop? Below the very next level of support, correct? And now let me mention something. Now when you see a level of support here and the very next level of support here, they're kind of close together. They're kind of close together. So when they're close together this way, it would be a better idea to place your stop 2 levels below. First level of support, second level of support, third level of support. But this low and this low, they're so close together, it may be a good idea, and this you wouldn't have to, because if you want to keep your risk smaller, this is still a good point to place your stop. But here would even be better, because if they want to manipulate price, then they're going to have to take it down 2 levels below support, and when price goes below here, then they would risk a trend change and spooking the herd into starting to sell back down here, when the operators and most major or large or professional traders, they're 9 times out of 10 in line with the trend. So an operator really doesn't want the trend to change. If I was going to go short on a break below here, I would, once price closed below this low here, I would place my limit order for here, so that when price pulled back to here, now I'm short. Where would my stop go? What's the next level of resistance? It's here. So my stop would go here. Where would my target be? If I entered here, where is the next level of support? Well, the next level of support, when I look across, is going to be here. Now, I wouldn't place my profit target below here. I would place my profit target here, because this is the next level of support. Now, if price continued down and broke down and closed below here, now I would place my order to go short there. I would place my order to go short here. And then if I place my order to go short here, where would my stop be? My stop would have to be above here, above the next level of resistance. If I went short on the break below here, where would my target be? Well, when I look over here, where's the next level of resistance, or support below here? It's here. So then this is where I would place my target. And you see, so forth and so on down the line. And this is how you determine where you want to place your stops and where you want to place your profit target. If you do nothing else, if you don't even consider pivots, you will be successful, much more successful than you have ever been. You see, pivots they're like the beginning, they're the cell, and anything grows from inside out. And when I talk about pivots, that's a move starting from the beginning. That is the seed. But when we talk about breakouts, we're talking more about continuations. We're talking about trend. We're talking about really the major moves. So we can consider this a pre-pivot analysis. Now, however, this is not the only thing you have to consider. When we use our line charts, think of our line chart as our outline. This is our shell. Now, in order to fine-tune our entry and our exits and our stops, then we go to the bar charts or the candlestick charts, because when we do that, we have to consider the extreme highs and the extreme lows, because the line chart only considers the closing price. But in order to really fine-tune your entries, your exits, your stops, your profit targets, okay, we need to see the candle chart or a bar chart. But the line chart is our outline, our frame that puts us on the right side of the market. It's much easier to determine exactly where the market is in its particular phases. And just let me say one more thing about trend also. When we talked about here, this was the break that turned this kind of uptrend into a certified downtrend, was right here. This is the first break that we spoke of before. Well, although this is an uptrend coming here, the major trend is still down, okay? Until price breaks back above this high, the major trend is still down. You will have a major trend and a minor trend. And for instance, this downtrend started here and went down here, and this uptrend, and it is an uptrend, but it is a counter trend move, and it is a counter trend because it's counter to this prevailing, this major downtrend which started here. You understand? So even when we got up here, we could be anticipating that this market was going to fall, because in actuality, if price moved up to here, we want to go short regardless, because that is the major trend. But that is another step forward, and I don't want to get too deep into that right now, because I want to make sure that you understand trend and breakouts, and how breakouts are the second major trading opportunity when you're trading markets. There's really only two safe times to trade a market. That's on a pivot reversal or on a breakout. And if the breakout is in the direction of the trend, that's called a trend breakout. And that's what you want to trade. You want to trade trend breakouts.